Good afternoon, learners. I welcome you all on behalf of myself and School of Management Studies, Indira Gandhi National Open University. I am Dr. Subodh Kesharwani, a faculty member in School of Management Studies. The topic which we are going to discuss today is term lending financial institutions, all India level. This is part of the course ECO 9, Money and Banking. Banking industry is flourishing in a big way. Banking system occupies an important place in country's economy. Rather, we can say that development bank is a hybrid institution. Banking industry facilitates people in a big way. Nowadays they are facilitating by providing home loans, housing loans, car loans and many other facilities. So it's basically a big requirement for the people, and there are some private players like MNC's bank, ICICI, SDFC bank and some nationalized bank which are running from the last many years, and we have some non-banking financial institutions who are providing the services in big way. Today we have with us Dr. Madhulika. She is a faculty in School of Management Studies. Her area of interest is economics, finance and accounting and taxation. I request Dr. Madhulika to take a session. Thank you.
Thank you, Dr. Subodh. Banking system occupies an important place in nation's economy. A banking institute is an indispensable of modern society. It plays a pivotal role in the development of economy of the country and from the core of money market in an advanced country. Students, in our previous lecture you have learned about the commercial bank and their working system. In this session we will discuss about the main financial institution, their working system and the problem which they are facing. Basically, financial institution or development bank, they are engaged to provide the financial assistance in the form of long-term and medium-term loans to the industrial concern. They also provide the other technical assistance and trainings for establishing industry and to running smooth industry. So, development banks are a special financial institution established for the supply of basic 3 ingredients of development, that is capital, knowledge and entrepreneurship of industry. These banks have been established during the post-World War II in both developed and underdeveloped countries. These banks should also assume the promotional role by undertaking potential industrial survey, identifying growth, providing training, consultancies and other facility to interested entrepreneur right from the stage of a project up to the operation of project. So according to William Diamond, a development bank is a hybrid institution which combines in itself the function of finance corporation and development corporation. A finance corporation is an institution which is concerned primarily with long-term capital, while a development corporation is concerned primarily with equity capital and with fostering and managing specific companies as well as providing financial support. Thus, development bank is a financial agency engaged in providing medium and long-term assistance to industrial undertaking in the forms of loans. It guarantees loan in addition to undertaking of underwritings and direct subscription to shares and debentures. It also provides technical know-how and training to entrepreneurs. Here, technical know-how means technical training or technological training. Functions of development bank. There are some main functions of development bank. First is sanctioned loan. The main and basic function of the development bank is to provide or facilitate the sanctioned loan in the form of long-term and medium-term loan to the industrial concern. They also provide the deferred payment for purchase of foreign equipment and capital goods from abroad. Guaranteeing loan. Guaranteeing loan is the another important function which is provided by the development bank. It also it gives to the industrial concern for their deferred payment from purchase the capital equipment and other capital assistance. Underwritings of industrial security. The main and important functions of the development bank is the underwriting of the industrial security. It means development bank provides the underwriting of issue of shares, debentures and bonds. Here, underwriting means there is a contract between bank and company. When company issue a share to the public, bank will take a responsibility to sell all these shares to the public. If the contract fails, the bank will take all the shares or purchased all the shares by themselves. In the consideration, bank charges a commission that is called underwriter's commission, and the whole process is called underwriting process. Next is the investment in shares and debenture. Development bank can directly invest in industrial concern by subscribing shares and debentures. Merchant banking function. Some development bank are doing merchant banking function because they have been established as a subsidiary company. Development function. Development bank and financial institution not only act as a term lending institution but also provide some other functions like providing technical assistance, giving consultancy, conducting survey and giving training to the industrial concern and to improve the management system to the industrial concern. Now we will take up the
Dr. Madhurika, I want to interrupt you. What you have told in the beginning, that development banks, if you see the characteristics of the development, they used to facilitate in terms of providing capitals.
Right.
Sometimes help them in building their know-hows, like
right.
Knowledge transfer and all. And
right.
sometimes they used to guide the entrepreneurs to
giving a technical knowledge and consultancies for the improvement of industry.
Okay, so apart from if
financial assistance, they are providing other assistance.
Okay, like if you see the conventional bank services, previously they used to confine on this capital part. Now
right.
they have come up from this capital part, finance part, and they are basically providing the knowledge,
technical know-how.
Technical know-hows
and also providing training, they are conducting also a survey for the development on behalf of the concerns.
So if you see now, the banking industry have got a very broader purview.
Exactly.
So they used to means their job is not confined to one area. They
are not only providing finance, they are also providing Apart from finance, they are providing consultancies and conducting survey and giving training.
So they have no expertise in this area. In fact, if the entrepreneurs want to need guidance regarding how to enhance their profit and how to expand their business, they used to guide in this area also.
Exactly, exactly.
So they have got some training division or something like that. Why
they have a separate training division and research department also,
which is look after all these activities.
Right.
So I hope learners should be aware about that. This banking industry have got a very broader purview, and they are not confined to only
finance,
only distributing finance. They are basically coming up in different areas, providing consultancies and other
providing
activities.
Training and technical know-how. Now we will discuss all the financial institution one by one. First of all, we will take Industrial Finance Corporation of India, that is called IFCI. IFCI is the first development bank. It was established in 1948 through a special act passed by the Parliament. The main function of the IFCI is to provide financial assistance in terms of long-term and medium-term assistance to industrial concern. The main object of IFCI is to provide the financial assistance to the industrial concern where the normal banking facilities are inappropriate. It also provides the financial assistance in terms of long-term and medium-term loan to those industry who are registered in the country and are engaged in manufacturing, mining, shipping, hotels, etc. It does not provide the financial assistance to medium-term. It does not provide the financial assistance to small-scale industry and unregistered company. So IFCI basically provide the financial assistance which are broadly classified into three categories. Number one, first is the project finance. Project finance, under the project finance, it will be distributed in various ways. Number one, first is long-term loan. IFCI provides the loan in both the currencies, like in Indian currency and as well as foreign currency also. Underwriting of equity, IFCI also provides the facility of underwriting of issue of shares, debentures and bonds. Subscribing to equity, it also subscribes the issue of shares, debentures and bonds.
So like they are providing this IFCI role is to provide loan to the
industries
and to the particular projects, and that will be for the long term.
Industry who are engaging in especially shipping, manufacturing, mining and hotel industries.
So is there any modus operandi or procedure for it, that they are going to give loan to the indigenous companies, that those companies which are in India, or they are providing loans to the industry which are though they are having a parent body in the foreign countries, but they have established their business in India, so they can provide loan to these organizations also?
They can provide, but if they are registered in the country.
Okay.
The condition is that they are registered in the country.
Say if the Larsen and Toubro is a multinational company, have established business in India, and they have they are producing cement in India, say, so they will provide loan to this industry for expanding their business.
Right.
Because this is an indigenous company, or maybe they have a collaboration with the Indian partners.
Indian partners, or maybe collaborative to the foreign partners also.
Okay. So if the Indian concern, say Reliance, have is in the petrochemicals and they have opened their branches in the different countries, so they will also get a loan.
They will also get a loan, and IFCI also provide the financial and other assistance to the Reliance. Now the next is guaranteeing the deferred payment. IFCI provides, it also provides the facility of guaranteeing the deferred payment for the purchase of foreign equipment from abroad and also in India. Guaranteeing of loan raised by the industrial concern or for foreign currency from foreign financial institution. Next is the next main point is financial services. IFCI provides financial and services and merchant banking services. Apart from financial services, IFCI provides the consultancy, providing training and to the entrepreneurs right from the beginning.
So this will come under the promotional services.
Financial services.
Financial services.
Financial services. Under promotional services, IFCI not only act as a financial company or merchant banking company, it provides equipment financing, leasing financing, equipment procurement, equipment installment, buyer's credit installments, buyer's credit and supplier's credit also. Management and organization. The management and organization, IFCI is managed by the board of directors, which consists 12 directors and which consist partly nominated and partly elected director by the Government of India. Central government appoint the whole-time director with the consultation of Industrial Development Bank. These are the following directors of board of directors. One chairman appointed by central government, two directors nominated by central government, one director nominated by RBI, three directors nominated by Industrial Development Bank of India, two directors elected by insurance concern, investment trust, etc. Two directors elected by cooperative bank. Now there are the functions of IFCI. Granting loan and advances to industrial concern and subscribing debenture which are floated by them within a period of 25 years. Granting the loan raised by the industrial concern from open market or from any other financial institution. It also underwrites the issue of share, debentures, bonds and other securities. Acting as an agent for the central government and also World Bank regard the loan sanctioned by them to the industrial concern in India. Subscribing directly to the shares, debentures and bonds to the industrial concern. Now the next financial institution is Industrial Credit Investment Corporation of India, as we all know, ICICI. ICICI was established in January 1955 as a joint stock corporation. It was the second all India level development bank. The main objective of this bank is to channelize the World Bank fund to industrial concern in India. The main objectives of the ICICI are as follows, like it provides financial resources to the industrial concern for their improvement, betterment, development and modernization. It also encourages inflow and participation to foreign capital in private industrial units, to encourage private ownership by the investment in industrial sector and to increase the scope of investment in industrial sector. The management is vested in the board of director. The ownership of ICICI is vested in the hands of board of director consisting 12 directors. The chairman and a managing director will be appointed by the Government of India. Government of India after consulting Industrial Development Bank. Types of assistance. ICICI provided the assistance which are as follows. It provides loan which are repayable over the 15 years. Finance through equity participation. It also sponsors and underwrites new issue of shares, debentures and bonds. It also makes fund available for the investment by revolving investment as quickly as possible.
Okay, so this ICICI also provide loans for on a long-term basis.
Yeah.
That is for 15 years.
That is for 15 years.
So is there any criteria that this could become under the category of short-term loans and long-term loans?
ICICI basically provided long-term loan to the industrial concern,
okay,
for the establishment of industry or to running smooth industry.
Okay, so IFCI is a one bank, and ICICI is another bank.
Yeah, IFCI is the one bank and ICICI is the
Okay.
another bank. IFCI is established through special act passed by the Parliament, and ICICI was established as a joint stock bank. So
Okay.
there are the basic difference between the two.
And recently ICICI had come into this individual business also.
Individual and commercial business.
Commercial
You can
business.
say it is working in a commercial business or
It is
commercial
multinational
bank,
bank.
multinational bank or commercial bank like HDFC and SBI and
HSBC and all.
Right, exactly.
Maybe it could be parallel to a nationalized, like a nationalized bank functioning.
Exactly.
IFCI is not into this business.
No.
They are
IFCI only
exclusively in
purely a financial institution which provides to the long-term loan to the industrial concern. There
Right.
is no relation between IFCI and direct to the public.
Okay, but ICICI have expanded their business and in these different areas.
Right. Next function is guaranteeing loan from private. It also guaranteeing loan from private investment. Provide loan in foreign currency from for import of foreign equipment from foreign countries. Furnishes managerial, technical and administrative services to the industrial concern. Undertake promotional activity for the fastest growing backward areas.
Okay, like creating the
SEZ and remote areas
remote
also.
areas where they think that the industry can be floated and
Can be floated and established.
special economic zones like.
Right. Now the next financial institution is Industrial Development Bank of India, that is called IDBI. IDBI was established in 1964. IDBI was established in 1964 through special act passed by the Parliament. This bank is mainly enlarged and apex to role to achieve the goal among all the financial institutions. This bank is wholly owned financial corporation of RBI. It has been delinked from RBI and made an autonomous corporation. The main objective to be established of IDBI is to coordinate the maximum effort to the industrial growth. And the another objective of the IDBI is to promote the industrial sector and coordination, financing and also promotion. It is an apex institution for term finance, and you can say it is a topmost financial institution for providing long-term and medium-term loan to the industrial concern.
So that's why it is called as term finance.
It is called a term finance.
They are basically confined to some areas.
No, they are also providing technical assistance, consultancy, and they are also conducting survey for the promotion and development of backward areas.
Okay.
So
more or less all these three banks, what you have talked about, IFCI, ICICI and IDBI, have got the similar functioning.
Similar functioning. Coordinate working of institution engage in financing to the industrial concern. It also provide term finance to the industry. It provides plan, promote and development industry and to fill the gap of industrial structure in India. To provide technical and administrative assistance of the industrial concern for their promotion and expansion also. It undertakes market and investment research and conducting survey for promoting the backward and remote areas. Management and organization. Management is vested in the hands of Board of Directors. The Board of Directors are as follows: full-time chairman cum managing director appointed by central government, representative of RBI appointed by central government, 2 official of central government appointed by central government, 5 representative of financial institution nominated by government, 6 representative of public sector bank nominated of government, 2 employees of financial institution nominated by government, 5 person with special knowledge and professional experience nominated by government. Functions. There are some functions which are provided by the IDBI. Direct financing. IDBI provide direct financing to industrial concern in the forms of long-term and medium-term loan. Guaranteeing of loan. IDBI provides the facility of guaranteeing of loan to the industrial concern from open market and other financial institution. Accepts discounting of bill. It accepts discount and rediscount of bills, promissory note, hundis and other negotiable instrument. Direct subscription and underwriting. IDBI provides the direct subscription to the issue of share, debenture and bond and also underwrites the issue of share and debenture bonds. Refinancing facility. IDBI provides the refinancing facility to the industrial financial institution like scheduled bank, other commercial bank, cooperative bank. It provides loan between 3 to 25 years loan granted by IFCI, SFC, etc. It also provides loan between 3 to 10 years granted by cooperative bank, scheduled bank and other financial institution.
So basically this refinance is the
refinancing is this bank is providing the refinancing facility to other financial institutions.
Say somebody had taken a loan, how this is different from the simple finance?
See, it is a refinancing facility like a financial institution want some loan, so he can get a loan from IDBI.
Okay. Say they have taken some loan from this bank. Say they have taken loan from IFCI.
Right. They have simply paid the interest like other industrial concern or simply investors or.
So now they have gone for another loan. So it could be called as refinance.
Refinancing. It could be called as
because already they have taken loan from the existing bank.
Right.
And now they have gone for the another loan.
Right.
For the same functions and all.
Same functions and all. Export loan between 6 months to 10 years. It provides loan to the which is granted by the cooperative bank, financial institution and SFC. Now the next an important bank is Industrial Reconstruction Bank of India, that is called IRBI. IRBI was established as a statutory corporation on 20th March 1985. The main objective of this bank is to function as a principal credit and reconstruction agency for the revival of sick industries. Another objective of IRBI is to bring the coordination among the various agencies for working the revival of such limit. The Board of Directors or Board of Management. One chairman appointed by Government of India, managing director appointed by Government of India, 12 directors appointed by Government of India. So the IRBI is empowered to grant loan and advances to the industrial concerns for long term and medium term also. It also underwrites stock, shares, debentures and other negotiable instrument or securities to guarantee loan, deferred payment and performance obligation conducted by the industrial concern. It is act an agent of central, state government, Reserve Bank, State Bank, Scheduled Commercial Bank, Cooperative Bank, SFC and other financial institutions.
So basically this IRBI functioning is somewhat different as compared to the other three banks. What you talked about, ICICI, ICICI.
It is also providing loan to the other financial institution.
Okay.
It is the main difference between.
And apart from this, they are providing a short-term loan also.
They are providing short-term loan.
If you see the functioning of IFC
and the main function of this bank is to. It is the main objective of this bank is the revival of the Sikh industry. Okay. How Sikh industry can revive.
Okay. For that they are providing loan.
For that they are providing loan.
So
already those industries are established, but those industries which are not
generating revenues, or maybe they are in the category of Sikh or gone to the BIFI.
Right,
and all.
Right. So basically they are the revival of the Sikh industries.
Okay. So they used to provide loan to these organizations.
Right. The main function of the IRBI is bank initiate the development activities such as providing infrastructural facility, raw material, consultancy, managerial and merchant banking services for the reconstruction and development of industrial concern and providing machineries. Another financial institution is the Life Insurance Corporation of India, that is called, we all know, that is called LIC. LIC is constituted under the LIC Act 1956 as whole government corporation by nationalizing 244 private companies operating from 97 centers in India. The main objective of this corporation was to establish the LIC business for to the betterment and best advantage of the investment and to channelize the fund to the public sector with the according to the planned priorities. The main objectives of the LIC is spreading the gospel of life insurance. It means it is spread out, the philosophy of life insurance is it is spread out all over the country. Mainly it is reach to unreached area, that is remote areas, rural areas and definitely urban areas. Here the gospel means philosophy. Life insurance protection to every eligible man and woman in the country through the insurance suited in the different community of the country. It mobilizes the public saving actively and efficiently, providing complete security and efficient and prompt service to the policyholder at economical rate, conducting its business with utmost economy with the full of realization that the money is properly safe and secure, developing a dynamic and vigorous organization under the management conducted a spirit of trusteeship. Next is General Insurance Company. By nationalizing Government of India nationalizing General Insurance Company and by taking over 107 General Insurance Company. Government of India established, for managing those company, Government of India established General Insurance Corporation of India in 1973. General Insurance Company is a holding company which have the 4 subsidiary company: National Insurance Company, Oriental Fire Insurance Company, New India Assurance Company and United Insurance Company. Management is vested in the hands of Board of Directors, which consists 1 chairman and director, including 2 managing directors. The objectives of the General Insurance Company are as follows: to invest the fund for social cause and development the backward areas. It includes central and state government securities, bonds and debentures of public sector. It also provides loan on soft term to state government and other agencies which are engaging urban and housing development. It also helps industrial unit by providing the direct and indirect facilities.
So, like you talked about 2 insurance corporations.
Right.
One is Life Insurance Corporation and another is
General Insurance Corporation.
So, this is basically they are meant for.
They are meant for the for public investment.
Public investment. Say, LIC will be covering the insurance covering the life part of the.
LIC is covering the life part and GIC is covering the industrial part or any
the
other
commodity. Say the one person is there who is taking insurance for his life, so he will go for the life insurance.
Life insurance.
And if he have a car, he can go for the general
insurance.
So this is basically a big difference into it.
Right.
Where is one is covering the life, other is covering the commodity.
Commodities or industrial sector.
Fine.
The next is UTI, that is called Unit Trust of India. In 1964, that the Unit Trust of India was set up under the UTI Act 1963. The UTI is an investment trust which offer to small investor to share in industrial and productive growth with the minimum risk and reasonable return. UTI, Unit Trust of India, is not a development bank, it is an investment trust. The main objectives of UTI is to encourage and mobilizing public saving. It channelizes them into productive corporate investment by promising favor the triple benefit of safety, liquidity and profitability for the investment, and trust encourage individual to save. It gives everyone a chance to indirectly own shares and securities in a large number of selected companies. Now there is an advantage of unit holders. Safety of investments. The investment made in Unit Trust of India or units is quite safe and secure. The UTI reinvests the unit in wide range security covering risk and returns, hence the investors are quite safe and secure. Steady and reasonable return on investment. As per the statutory guideline, the Unit Trust of India has to distribute 90% of total income among the unit holders. Hence, the unit holders are steady and reasonable return on investments. Liquidity. Unit holders can convert their unit into a cash easily, and Unit Trust of India repurchase the units anytime at the fixed rate by it, or unit holder can transfer their unit to the third party or can get loan from putting their unit from the bank as a security. So these are the advantage of the unit holder. Now my lecture has been finished, but students, you must know some technical terms or meaning of some technical terms.
These are basically the terminologies.
What
we are using in our daily life. We used to talk about this
underwritings and mutual funds and authorized capital. We don't know exactly what is the technical meaning.
If you see if you watch the television, always the mutual fund ads are coming in a big way.
Right.
And people are saying that you invest your money in the mutual fund, you get a very good return.
Right.
So these are some jargons, or say financial
jargons. So, but we don't know what exactly these means.
Right.
So the exactly meaning of mutual fund is a company without issued capital stock, owned by those members that do business with it. The profit of the mutual fund, net of reserve, are shared by its member. Then authorized capital, the amount of share capital in the memorandum of association and article of association of a company as required by the company. Now development bank, we all know development bank are providing the facility of long term and medium term loan to the industrial concern, but in technical term it is a financial agency engaged in providing medium and long term financial assistance to the industrial undertaking in the forms of loan. Then paid up capital, that the part of issued capital of a company that has been paid up by the shareholders. Now students, you must know the underwriters of shares and debentures. Underwriting is a contract whereby responsibility is taken or guarantee is given that the shares or debentures of the company will be subscribed for some individual, firms or company, gives a guarantee that so many shares of the company will be taken up by the public. In case these shares are not taken up by the public, they are taken up by the guarantor themselves. Those who gives the guarantee are called underwriters and the shares are said to be underwritten.
Thank you, Dr. Madlika. It was a very good session today, and in fact when I was talking starting the session in the beginning, what opportunity I have got from you to start the session, I have talked about this banking system occupies an important place in our country's economy. That comes very true. You have explained all the different banking corporations in a big way. You have distinguished how this IFCI, ICICI, IDBI is different from one another. And apart from this, what is the most important part that we have learned from today's presentation is that that banking industry job today is not confined to only disseminating capital or providing loans, providing funds. The major job today is to provide them a consultancy, provide them a way to enhance their business, knowledge transfer, how to generate revenue, research and development. These are some areas. So it was a very good discussion, and I hope the viewers who are watching today have learnt a lot from it. But still I was expecting some good questions from the viewers. Anyway, next time we have a session on this, they can jot down the problems and discuss with us. Thank you. Thank you, Dr. Madlika.